Hi traders, and welcome to the latest edition of the Keyzone Traders Trade of the Week. Now this week we're going to look at a day trading strategy that we took on the DAX yesterday, and we're going to look at how even when a trade is going really well for you and it's moving in the right direction, trade management and risk management can help mitigate losses in your trading. Hi traders, so this week we're going to take a look at a trade on the DAX. Now this is yesterday's action. We had a fairly strong support zone down here at 14,080 to 14,115, but we had also a zone around 14,180 to 205, and we felt that having held this 14,080 to 115 zone as support, then we needed to clear this 14,180 to 205 zone to see higher pricing. So this was a minor resistance zone that we felt if we gained acceptance above, then there was potential to push higher. However, if we failed and used it as resistance, then there was potential to move back to this support zone and a little bit lower. So let's go and have a look and see what happened with the price action. Now, we got this really strong impulsive push back down through this zone, which suggests that this move was a false break. And notice how two candles take out pretty much, what's that, from 7:30, so nearly an hour's worth of price action. So this is in 6 minutes, we take out nearly an hour's worth of price action, breaking back below the zone impulsively. So that suggests that there's a real imbalance and a shift in the order flow in the market. So we're then looking to go short if this zone holds as resistance, because we've got the false break down. We now, for this false break to be confirmed, we need to see this zone hold as resistance. And we get this move here, which confirms that as resistance. We then got a continuation pattern of this candle here. So we now have the price action telling us that the market is rejecting this zone, and then we see our pattern, our continuation pattern, to get short in the market. So we actually sold a break below this structure, and we had our stop above the zone here, and we was targeting back down towards the zone here for a 1-to-1 risk to reward. So the market is communicating to us that we think that it's rejecting this zone and we're going to head lower. And as you can see from the price action, the market just moves down really nicely and just almost gets to our target, but starts to reverse. Now, when I see this, I want to risk manage a trade just in case it's front run the zone, because trading is not always an exact science. Sometimes levels can be front run, maybe our zones are slightly off for the day. But when you get so close to a target, I like to manage my trades to make sure that winning trades or trades that get very close to their target do not turn into full losses. So I managed my risk. I reduced the stop down to, I think I got it at plus 30. So I reduced my stop to here, which was back above the moving averages. Now, if this was going to trend down, I'd want price to remain below the moving averages. So I've got protection from the moving averages as resistance as well. And unfortunately, we came down. We tested that low again. Couldn't quite push lower to hit our full target, and the market ended up going and stopping us out. But our original stop, which was up here, if you see, if we just left the trade to do its own thing, we would have actually taken a full loss on that trade. So it's really important. This was just a 1-to-1 trade, which it makes the risk reward a little bit, because you're going to, by taking risk off the table, you're going to actually get less than 1-to-1 risk to reward in terms of profit. But it does actually help reduce the number of losses that you take as well. So it's easier to do so when you're going for higher risk to reward targets. It's psychologically easier because you're still going to get more than one to one, so more than you risk on the trade. But even still, when the trade is going well and the price action here, all the time we're moving down, even when we got the pull back here and push down again, the price was really telling us that the market did want to go down and retest that zone, until unfortunately we reversed and took out our stop. but that trade ended up as a break-even trade for me rather than a full loss. So it just shows that even when the market's going well for you, when you get close to your targets, it's really important that you manage the trade so you don't then take a full loss on the trade. So I hope you found this useful. Please come join the Keyzone Traders community. The link is in the box below on our YouTube channel. I hope you found this useful. Have a great weekend, and I'll speak to you next week.